The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 12 o'clock, 11 o'clock till 12 o'clock Eastern Time. And this is Friday. Is this the first session in a very long time that the VIX index, the volatility index, on a weekly basis closes above certain moving average lines? I think it could be. I thought today I had a whole bunch of things prepared, and then I said to myself, no, I've had so many questions. Let's just get to the nitty-gritties of what I do. So, patterns we look at, why we look at them, why I literally spend hours on my daily newsletter because everything's hand-charted, everything's notated, there's nothing automatic. There are a lot of things that are automatic that I use as pre-programmed, like moving averages, etc. But the actual work itself, even though by the close of the previous day, in my mind, I pretty much have everything set that I'd be looking for the next day. That doesn't make it accurate. It just means that that's what I'm looking for. Parameters, what to look for, etc. The most important thing is that if I was just doing it basically for myself, I'd have very little writing to do at all. But because there's a newsletter involved, because I treat it as an educational. I remember when I first met Tom back in New Hampshire, and when he had his radio show there, and we were sitting in this room. It was, I can't remember now if it was the actual office where he did. I think it was where he did the recording. And we were looking at different, what I'd sent and what I'd been discussing with him before. And I had a chart up and I look for certain peaks, peak D, E, or F. If you get to an F, you've got to be real careful. It's the sixth highest peak. And I set my computer, my laptop up, and I said, okay, well, we won't do anything now. Let's just chat. And we were chatting away about TFNN, etc. And then I looked at my charts and it was can't remember now if it was a 2-minute or 3-minute chart. And I said to Tom, it was the S&P futures, and I said, if the signal's there, I'll show you when I get a reversal signal. And it was at an E, and I was expecting that there could be an F. Luckily, when I looked at my computer a minute or two later, there it is. We just turned around at a peak F. I said, okay, now we should be going down sharply. He said, oh, yeah, well, okay, well. And whew, we kept talking, and I actually forgot about it. Then I looked at the computer again and I said, let's have a look. And lo and behold, the price of the S&P had come down. And he said, oh, man, that's great. Would you be interested in doing something with TFNN? And I said I had my newsletter and subscribe, my clients, etc. But I really was interested in education. And if it was an educational forum, which he said it was, I said I'd be very interested. And so education is really important, and that's what we're about here at TFNN. We're constantly educating ourselves, and we're constantly trying to impart that knowledge that we've learned. So let me try to do that here. This is the E-mini. Well, let me just run the numbers. Dow's down 19. Let's call it 100. Dow's down 117,319. Oh, I promised myself yesterday. There's so much to do, but don't rush. You're not going to achieve anything by speeding up the talk. The S&P is down 8. The S&P is down 9.5 at 2,074. The comp index is down 26 at 50.29. Gold is up 5, almost 6 at 10.96. And for subscribers, I said I believe that we should be getting some kind of a bounce in the commodity area, and we'll have to see. Today's a very important day. I want to let the day play out rather than anticipating. I might miss something, but I really feel that gold has a way of fooling you enough times. Give it a little bit of a bout of strength that closes strongly, and then we'll have something a little more important. You've got silver down up 25 cents at $14.95. You got platinum up 10 at 961, but high-grade copper is still in the 230s, 234 area. Crude oil is at 44, and you've got bonds up almost a point and a half at 158.02. Earlier on, it was up. I just wanted to see what's. I don't see the dollars. I think it was just. Let me do this right now. Dollar. DXY, the dollar is at this point has made a new recovery high at 98.33, pulling back into the rectangle of the 120-minute chart. Call that a G. And leg C, I'm calling this for the moment leg C in the daily chart. I'll do a little bit more work over the weekend, but my thinking is here it's C. There might be a D, but we're really bumping into a lot of resistance of the 98.40s. All right, now. This is what I wanted to do. Within the context of my work, let's go back to what we were looking at, the ES and the ES E-minis, S&P September. See this wedge formation? You see the dashed line there from 21, 26, 25 to the tops of those candles? And you see this one here to the bottoms, up to 3, 4, 5, 6, 7 times hit. Today we went under it. So when you're getting to an apex of a triangle, especially an symmetric one, that has pretty much the same degree of incline as decline, when there's a break of one of the levels, you've got to take it seriously. The rule that you'd read about is that you'll go down to the base where it started, like a flagpole, you go down to the base. I do not have that as a rule at all. I have it as a starter point for the rule, because enough times I've seen it come right back, go back to making the apex with narrower and narrow trading ranges. What is really important is that if you want to use technical tools like the MACD, the moving average convergence divergence, and the slow stochastic, look how pathetic they are. 41% in the stochastic. MACD is still expanding those little red histograms, those vertical lines that are now red and increasing. Not good. And you've got the pattern that I call the lowercase h. You come down and you make an H pattern. There was another one, an arch or an H formation. There's a second one, a smaller one, and it says, because we took out yesterday's low bar, there's a real good chance that we could go down even lower. We could take out the 20.5650 level of the 27th. Now, this is going to be very important as far as I'm concerned. The 120-minute chart is the rudder, the shorter term indicator or steering that changes the direction. But you know, if your momentum of the weekly and the monthly is really strong, you're just going to have little turns, because this is a super tanker that we're talking about, the S&P and the Dow, etc. So when I'm studying these charts, I look for just 3 patterns. One is a straight line move. The other is an arch or an inverted V. That's one. It's just part A and part B. It's the same principle. And the other is a cup or a V-shaped formation. When the left side low bar, in this case 2070 of yesterday at 2 o'clock, if that is broken in the H formation, you have 1 bar, maximum 2, to come right back, snap back, and close above it, and that says, great, now you can test either a 9-period moving average above or a peak above. And look how many times you've gone A, B, C, and failed, A, B, C, and failed. This says to me that the decline we're in right at this very moment is part of an acceleration phase. So we've got to be real careful, because this dashed what I call the Chapman wave inside wedge target price line of a left right side price time match. Whoa, that's a lot of words, but this is the explanation. My techniques, the titles of them explain the falling X, the dreaded H. These things explain the whole concept. And in this particular case, you've got your arch formation, and from this low point at 2080, I just went like this. It's easier on TradeStation to do. Some platforms are real easy for technicals, and others are a little bit more difficult, but you can do it on paper. You print it out, and you just do this. You draw a line from there, from that. I always love to bump into the resistance on the left side, and then on the right side, I go to a particular, it would have been peak D, but you already moved much sharper to the right, so I'd use the base the low of the arch formation here, right at 2 o'clock on the 3rd of August at 2080, round number low. And I then colored it in, changed it so that I don't want it to be too messy. And I included it right there as part of the horizontal to the right move. And it says by the 10th, that's Monday, at 8 o'clock in the morning, we should be testing 2061.50. Now, it can happen earlier. Why? Because if you break through this trend line support in the Chapman wave inside wedge, I have different places that I teach how where you can take it from. And in this case, it's the smoother lower baseline. Once you start to pierce it, you can get to that level of 2061 much quicker. So it says by Friday or Monday, you should be testing it. Okay, one of the techniques I use. Now let's get rid of this, and I'll show you some other things. Because it's a technical Friday today. I've had so many questions that I really don't like to do this, but how else am I going to do it? So what I'm going to do right now is I'm going to go to, let me just highlight it. Boom, there it is. This is what I will show my subscribers every day. Why does it take so long? Because first of all, as the market's closing, or even before that, and then I have to refine it because of the price of the close, I'm busy typing away what we're looking at. This is the Chapman wave methodology that you learn every day as part of my subscription service. So you made arch patterns. You've got the Chapman wave inside wedge, which says, and it's hard to believe, but it says that by the 10th of August, Monday, we should be testing the area of 17,034. Why? Because this trend line support, there's another one right here, a dash one, a very faded one, which can take you all the way to the end of August to get to 17,034. But I'd shown subscribers with a little yellow circle right there. One of the reasons why we've been short and going short very often on the Dow, and we have added to the shorts in many, many areas. One of the reasons is that arch formation. Do you understand what I'm talking about? I'm talking about the same principle applied right across the board. It doesn't matter what time frame, the arch or the cup formation. To go with this, I'm going to go straight to Marvin in Orlando. Marvin, how are you?
Hi, thank you for taking my call.
My pleasure.
So I was looking at the SPY, and I'm seeing that the 50 days sloping down and the 200 days coming up to meet it. So, eventually at some point they're going to cross. And
yes.
Do you think this is a major market decline coming up then?
So, okay, let me do this. I'm going to answer your question by going to one of the charts that I would have been using for the weekend. I'll start it off right now. So let me just move this away because we'll come back to this chart. I'm going to show a bunch of things right here. So I'm going to go to the Dow chart, INDU, and we've got a break coming up. So this is perfect timing to show that we broke the arch formation in the Dow on this particular chart, but it is the weekly chart. Remember, I talk about time frames. So Marvin, when we come back, what we're looking at now almost certainly says the weekly is going to a sell mode, and I'll explain that when I'm back. Marvin in Orlando.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% cap payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days, and will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, we're back. Hi, folks. Dow's down 121, S&P's down 13, and we are on with Marvin in Orlando. We're talking about the SPY. I did show the Dow because the Dow has gone to a low on that weekly chart. If we close anywhere under Dow 17,320, I'm almost sure that I'm going to be getting an immediate upgrade in the weekly chart, immediate sell signal upgraded at the close at 4 o'clock to a sell mode in the Dow. The S&P is only now giving a sell signal if it closes under 208.10. It's a 207.13. Sorry, the SPY, that is. And Marvin asked about the SPY. So Marvin, what I'm showing here, first, let's go one step at a time. The 120-minute chart here shows an arch formation, same thing I've been talking about all the time, just a simple rollover from a double top, in this case, peak C1, peak C2 is a fraction lower, and there's that downtrend line, and it says on the day, on the 120-minute chart, 206.83 is very important support, and that by Monday at 1:30, I think it is, Monday at 1:30, the low of 206.26, 206 point, let me type that in, made 206 points, did I say 26? I did. 206.26 made on the, it was the 24th, the 27th at 11:30 in the morning. That low is going to be a target. And so now basically, I'm going to answer it this way. There's a slightly different chart, and looks like a peak A minus will be unfolding. If there's a close any day, not in the week, but any day underneath 206.26, the weekly chart, it means that you've gone to a lower low that week, and that there's a real good chance that the next target would be 204.11. That might take a little longer to get to, but that's where we'd be going. The MACD is very weak. The stochastic it attempted to rally the other day, couldn't hold it. It's failing, and now I'll give a big picture of the SPY. There was that crazy trade back in December, the week of December the 19th, 2014, that hit 212.97. The last few minutes of the session, somebody hit the button. I don't know what they did, but there were a couple of trades that never impacted the Dow or any other indicator, any other index, and went to 212.97. And I joked with Tom, I said, it's so often, and it's a funny thing how this happens, and if you trade enough, you know that every once in a while there's an accident, there's a bad tick. But it also happens that that bad tick sometimes gets hit later on, and lo and behold, the SPY went to 213.78 in a peak E formation. It made the arch and then had a right shoulder failure, another technique that I talk about in my CD, Introducing the Chapman Wave Methodology. So that says to me very clearly that the technicals remain negative, that rally was a false move to the upside, and that there's really a very good chance, and this is the thing that's going to be important, that the weekly chart, if we close ugly today, big deal, we're down 12, and the S&P, we're down 1.11, only 0.54% in the SPY today. Big deal, because we've had ugly candles before. It's the way we close, and if the close is towards the low of the day, then there's a real good, and we open lower on Monday. I don't care what we do after that, but if we open low on Monday, that says for the first time in quite a while, S&P monthly chart is starting to tackle the 9-period moving average 3 consecutive months in a row. We haven't seen that since to the upside back closed above in January of 2012 at 133.40. We haven't seen that 9-period moving average in the monthly chart even being tackled more than it's acted as a trampoline, a springboard to bounce up. Now what we're looking at is become a magnet, and very soon, my estimation, even though the stochastic's at 83% in the monthly and the weekly, the MACD's expanding and the stochastic's at 83%, still good, but it's starting to become negative. The RSI right there is negative. The relative strength and the unbalanced volume is the one thing that's still holding up together with the price. My suspicion is one at a time, you'll see the SPY daily, which is now in a sell mode. The sell signal, I'll know at the end of the day, I'm going to call this a sell signal in the SPY weekly. I've got a down arrow already, but technically, I really like to see 2 out of 3 consecutive weeks where the SPY closes decisively under the 9-period moving average. Then I'm able to say, hey, I think I've gone from a sell signal even to a sell mode. So it's a kind of important where we close today. But most importantly, just for your information, it is that monthly chart that I'm really looking at. Have I answered some of your questions? Oops. Hello, Marvin, you there? Maybe Marvin's listening. Yeah, maybe Marvin is just listening. But I think I did answer many of the questions. I'll be covering it again in a moment. But we've got a break coming up. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Tom O'Brien has just announced a live online taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Your 30-day free trial to Market Insights at the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Now, I'm not sure if Marvin just disappeared or whether we had a connection problem, but I just wanted to wrap it up by saying I'm going to be going through charts right now and explain why I think this is a very serious decline and why we've got to take it to heart and why caution is really the theme because of all the factors that I've been talking about and the different sectors that are now becoming quite negative. And so I'll show you, this is a chart, just a quick wrap up here. This is the Dow chart that I show, here's the little paragraph I give, and then I add to it a whole bunch of stuff. And I talk about what we're really looking at, and that is higher highs and higher lows, lower highs and lower lows, and you've changed the theme from moving up. The tide has moved down. Stochastic and MACD are moving down as well. Let's go to Bob in Hartford, Connecticut. Bob, how are you?
I'm doing well, Basil.
Good. And you'd like to look at
about Bank of America as a possible short.
Okay, now there are a couple of things going on. I've taken quite a bit of time. We tried, in fact, to stay long the XLF. We got a small position. Every time we get in, it moves up, and then it looks like it's going to break out, and then all of a sudden it pulls back, and it's stuck between 24s and 25s. Bank of America was a leader on the way up in the most recent July rally, and then it just stalled out. And one of the concerns I have is if I'm correct in my notation, when I say if I'm correct, it means that if the way I've notated the the weekly chart, calling it a potential peak F, although the MACD is good and the stochastics are 81%, I will only know if this is the characteristic of what I call a single leg A to the upside, because if a Bank of America trading at 1779 closes in the next 3 sessions, maybe Friday, Saturday, Monday, Tuesday, Tuesday afternoon or Wednesday, if it's starting to tackle the 1747 level and actually closes below 1747, that's like a single leg A up failure. And that says that you've got a real good chance of testing the candle of the 17th, the low of 1686. Where would I be wrong? If the MACD and stochastic hold very well here, and Bank of America is seen as one of the stocks that needs to have its turn in the XLF as a low-priced, I'm not saying cheap, I'm saying a low-priced bank stock that has the potential just at least to move towards the upside, then I can see maybe a retest of the 1830, 1848 level. I'm in your camp, right, that your bias is to short it and you just want some kind of technical confirmation. Is that correct?
Yes, I already got some puts on it, but there's also an interesting gap at 1661, and it's below the 50-day moving average.
There are a couple of gaps, but the gap that we're really looking at is the most recent one is 1749 to 1715. That gap, I would love to say I'm almost certain, 100% certain that it's going to be filled. Instead, I'm gonna back off a little bit. I'm gonna say I'm pretty sure 99.9% that will be filled sooner than seeing $18.70, $1 up. I think you're going to get $1 down quicker than that. So if that's the case, we're looking at the 120-minute chart, another arch failure pattern. That one recycled A, B, C, D, went to a peak E right there, pulls back, makes the arch formation, which goes to low case A. Yep, I can see 1757 is the real test of support in the near term. So you've got the puts. Now what I'm getting, so you wouldn't add or anything. You just want a kind of a confirmation that you've got the direction, at least what it looks like technically, that you got the direction correct. Is that right?
Yes, that's correct.
I'm in your camp. I believe that the pattern we're looking at here is that H pattern in the daily right there. You've already seen it working quite successfully in the 120-minute chart. By the end of the day, if you're not at 1783, it's at 1778 right now. Instead, you're at close to 1773. That'll be a confirmation that the best you'll see is maybe another arch formation. But within a week or two, I would not be surprised to see that the Bank of America, BAC, trading somewhere in the 1720 to the 1690 area, based on the way the market is right now. So all I can say is if you've got, where are your puts? Are they near month or further out?
They're like, they expire in 23 days or September or something.
Okay. All right. So we're talking about two separate things. So if you're doing, the way I'm going to say to you, this is the period that should see the period of acceleration to the downside in the market, and it should take the XLF. Let me just check the XLF for 1 second. XLF right now is, no, didn't go there. There it is. Okay. XLF is, there it is. That's the pattern we're looking at. I already drew it in. I think the XLF is going to take out the low of 25.01. It's a 25.04. That was the low of the 3rd of August. If it does that, you've got your H. The big test comes at 24.85. I think you're in the right side of the boat right now. So the only thing I'd say is if I'm completely wrong, you will know by Tuesday, because Tuesday, that's my timeline that I'm looking at. So if by Tuesday the general market suddenly got a big move to the upside and the XLF participates and moves into the 25.35 to 25.40 area, then you must watch it very closely. But I don't think that's going to happen. I think you're on the right side. The only reason why I asked you the time frame is if it was longer out, I'd say, you know what, I just stay in that position. Call me in another 3-4 days to see if you want to add a shorter term position. So now it's the other way around. I think you've got your short term position. Let's see how it is. If you have a chance, call me next week, Tuesday or Wednesday, and let's look at it to see whether or not you can actually extend out and get further, like October, Bank of America puts based on what it's doing. Okay?
Yeah, I'm feeling very aggressive to the downside. So I thank you for all your help, and you're really one of my heroes over there at TFNN.
Oh, well, thank you very much. And we always appreciate our listeners, and I do appreciate that. Thank you, Bob. And when I drive by Hartford on my way to New York, I'm going to give 3 honks. If you hear 3 honks, it's me on I-95.
Okay.
Thank
very
you.
good.
Okay,
Bye-bye.
folks, let's go to Jerry in the Back Bay. Jerry, how are you? Jerry there? I'm pretty sure you're there? A little delay? You're only 5.5 miles away from me, Jerry. Oops. Maybe it's on my side. So Jerry wanted to know, Jerry, just yell, I'm here, right, even when I'm talking, so that I know you're there. Meantime, you want to know about Boeing. Boeing has folks, how many times have I shown you the same pattern over and over? The arch formation, the one I call the lowercase h. And doing that, it's at 142.48 right now. It's down $1.34. It's not a good pattern. It's doing the same thing in the weekly chart. It's done the same thing in the peak A, B, C, D. Remember the rule of the Chapman wave? You want to get to D's. If you only get to a C, watch out. That could be a very sharp decline. But D's have the same effect, but they are confirmation that you've had a fulfilled. Oh, no, that's not a D. That's a D right there. You've had a fulfilled buy mode that has gone to a buy signal. Sorry, I'm doing 2 things at once. A buy mode that has gone to a sell mode. If you break over 50% below the high, and this is exactly what's done. It's under the 200-period moving average. Now you've got the Boeing, one of the leaders. Look at this chart. Look at that monthly chart. Went to a peak F way back in February at 158.83, trading at 142. It's still holding kind of well. But I would say, Jerry, if you're listening, I know sometimes it's difficult. You have a business to run. So if you had to take a call, that's fine. But if you're listening, I'm going to say to you, if this is a C minus, which I think it's going to be in the daily because the MACD is turning down, the stochastic's only at 46%, I would suggest to you that Boeing is going to test the 141 level, which is really critical. It's at 142.52 because it's the 200-period exponential moving average support, but it's also the support that most fund managers look at, and that's the simple moving average, the 200, and that's at 141.13. They're just about across. So my suggestion to you is that, yes, watch it closely. And the other thing with the wick of that candle, if Boeing goes in the next 3 days under 140.70, there's a good chance it's going to test the low of this candle of 139.51. Right at this moment, right now, just in the periodicity of the market in time, this is about the time that you want to see some kind of a rally attempt in the general market. Now let's go back to my story here. Oh, and the upside, I'm wrong if Boeing by Wednesday of next week is trading at 146.50. That's all it says. Then it's going sideways. It's acting very well, but right now it's not. So I want you to go back here. And hello, are you there?
Yeah, right. But I got cut off. Anyway. Yeah,
okay. So you didn't get what I was saying. What I was saying is that
no, I don't
know what position you've got in Boeing.
I watched on TV.
Okay. So you can see that it's got the arch formation like so many of the charts. It's got, in fact, there should be a little bit of a rally in the market right now. If the market can't hold a rally and starts to sell off in the close, I would be watching Boeing because it's been such a leader, a cyclical leader to the upside, that if Boeing starts to break towards the 142 area instead of going to the 142.70 by the close, that's going to suggest Monday you got to be real careful. Could be an ugly day Monday. I'm
thinking of shorting it. Yeah.
So this is what I'm going to recommend. I'm going to say if you want to short it, don't get your full position right away. I'm going to recommend that you just start a position right now at 142.51 and make it very easy on yourself. Just have the parameters locked in, and that says because at 142.51 right now you've got all the way to the low of 139.51. So you've got yourself 3 points of cushion on the downside, because if you call me, say, on Monday and it was trading at 141, I'll say, wow, you've got yourself just 1.5 points or something. Right now, this is a good time because a starter position says, great, I don't mind what it does, because if it rallies just a little bit by Monday afternoon, Tuesday, it gets stuck at 144.20 or 140, let's say 143.90 to 144.20. And then on Tuesday, it starts to move down again. That's making the H formation. Or you can think of it as a lowercase m formation, and you can add to your short position. And so this has got a nice place, because on the 120-minute chart, it's already given the peak D, and it says that the 143.53 level is the 200-period exponential moving average resistance now. It was support, now it's resistance. So you want it to go a little bit above and make another, if it can, I'll draw it in right now. Maybe it'll do this, another little bit of an arch formation going into the 144 area just over there. But that's the way I'm looking at it. And this market really is not a good market, even if there's a bounce at any point.
Yeah, I do things on a fundamental basis, and I think lower oil prices makes people not need to buy airplanes more, and they get hurt by the dollar. It makes Airbus more competitive.
I think the dollar is really the greatest issue right now.
And so I think that this stock, by September, is going to go into the 130s, maybe 36.
I'm with you on that. It's in a rectangle formation, and the rectangle formation says it should make gently lower lows and lower highs, but at some point, based on this particular pattern, there'll be a sudden 3-point slide to the downside, and that'll be the trigger to say whether or not the whole area of support in that whole 127 to 123 area is going to be supported. And I'm looking out a month or 2 or 3 even, but I think you're right.
Yeah, the risk is they have a huge buyback program, so that's what.
That's been the risk, but the tide is greater than buybacks. That's the way I look at this.
I think so right now. Yeah. Thank you very much. Have a good weekend.
Thank you very much. Always appreciate it. Thank you, Jerry.
Hey, congratulations on your call on the IBB.
Thank you very much. I appreciate that. Okay, folks, have a great weekend, Jerry. So let me go back to our charts, because that leads into the next thing. So what I wanted to show in the work I give my subscribers is this. Then I give the overview section. I wanted to show the overview section. Usually it's this big, a lot of words, but this big. But the reason why I wanted to show it was this mirror effect. You see this? This is the Dow. This is the VIX index. And as they get closer, they tend to form this arch, which is like a circle formation. And now there's another circle. And what I was saying to subscribers is we'll see how this level right here of support in the Dow holds, because we want to see if the VIX index rallies sharper and actually starts to, I've got another chart that I'll show in a moment, starts to make another cup formation. And that's going to be very important, because that means that the cup will get closer to the arch formation, and at a certain point they'll start moving away. It's a mirror image, right? And this is what you can see in the lowercase h that goes to an m in. This is the whole thing. I've got overview and market today. Caution prevails, even though the Dow hit. And I give a whole pre-C, and I talk about even the order parts. Here is where I discuss different sectors, etc. And then the very last line or two is what I'm expecting today. Today is a chance that an oversold Friday rebound to collapse the VIX is possible. But even a Dow minus 30s, SPX minus 4s, comp index minus 7s would be poor action. Oil's rallying might help the market a bit, but a sudden deeper slide would be the first time in a while that the VIX closes the week sharply higher. And then I'll try to find it here if I've got it. That's the chart I wanted to show. This is the TVIX. I'll be right back. Basil Chapman, Tiger Technicians Hour.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, so as we're going into the wrap-up, let's do this. I want you to do, here we go. So, nah, not there. Okay. What I wanted to show you was, if I can find where it is, take that one away. All right. In the, I can't get it. It's there. Oh, there it is. Okay. Got it. So there are many things that I talk about in my newsletter, and I go through all these different charts. And one of the charts I showed was the VIX index. We have an ETF that's based on the VIX index. And I showed the patterns that we are looking at, and I explained why we're looking at it and why this Friday's close is very important for it. There's something else that I do. This is Exxon. We thought we'd take a little position in Exxon just to see if this was some kind of a bounce. But the overall, based on both my Chapman wave methodology and looking at Elliott wave, although my daily Elliott wave is a little variation of the proper Elliott wave, the monthly isn't, the weekly isn't. my suspicion is that you've got yourself at least a bounce towards, if it can hold nicely into Monday, you've got a bounce. So we've got a little position in Exxon. First time we've been in Exxon in any position, and there's not for dividend. This is just a short-term play for the arch formation. I just want you to be there. I want you to hold it because I want to be there for the next move down, because I think that the oil, integrated oils are going much lower over the coming months. This is just more a play on a trend that I thought we'd be able to attempt to play. This is the XLV. Everyone talks about the XLV being the most amazing ETF. I agree. It's a fantastic S&P Healthcare, Select Healthcare Spider Fund. But in the Chapman Wave methodology, I got signs that say on a short-term basis, we went short almost less than a point from the top, that there's a good chance that this is a period where the rudder, the 120 right there, then the daily, and maybe the weekly starts to give signals. That's the only way you can impact this fantastic monthly. So it's the starter attempt for the first time in the XLV to go to the short side. We'll see if that works out. We've got another one here, which is the right here. This is the, if I can find it, IBB. We went short the IBB. We are long the IBB, the 200% short position as well. And why? It's the same thing. We went short right there, just near the top. And this is certainly going to be a very good chance that there's a potential peak F in the weekly chart. So the monthly chart, nothing yet. Amazing. Not even close to the 9-period moving average of 347. Aha. But wait a minute. That 120-minute chart was the rudder. It gave the start of the move. The daily is giving the next one. But until you get the monthly really turning around, the technicals are very weak. But the price is held until the price really goes into the 357s. That monthly is still the bar. So we'll see if the real tide is changing. And that's the way I go through all these different technicals. And then I have my, this is from my daily, this is my Traders Corner, caution prevails. And we've got all our positions here. And I give an update on them. Oh, look at this one, BDBD. This is something we got the other day. I love the chart pattern. And I waited for the 120-minute chart to give a D right there. I said, let's buy it on the dip. We bought it on the dip, just got taken out. But this was the pattern that I had shown the subscribers right here. Right there. I showed the dashed line, Chapman Wave, inside wedge target line. I showed the level of 9.14 as a target to be hit on Friday the 7th. And we were stopped out. I never got back in, had a chance, didn't. And lo and behold, look where it is today. This is Boulder Brands Inc. So yeah, sometimes, as I said to my subscribers, the analysis is terrific based on the Chapman Wave methodology, but I did not do the trade very well. But look, everything there, that's exactly what we were looking at. So I thought I'd go through a couple of things. Otherwise, how would you even know what I did? So thank you. And we're about to wrap up. So you've got Nico and Paige coming up. Folks, just watch the Dow. At this point, there's a little bit of a rebound. I can just tell you, a close towards the 17,300 level or lower says that VIX for the first time on a weekly basis is saying, watch out. Thanks for being here. Check out my opening call this weekend, and I will be updating during the weekend. So have a great.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.